Welcome to another AriasWave update. Okay, so just basically coming back to the gold analysis. I did actually record a video a couple of days ago, but it didn't upload and I ran out of time. Been very busy lately, but hopefully that will change soon. Now, I still have the same markings from that video, the same labeling or predicted labeling that is obviously in line with AriasWave as to what is going on here. So I'll try to explain as much as I can without making this video too long. So in essence, we're in a wave 5, which is the last wave of this move up, according to the most recent um, bearish view, you could call it. If you take a look at previous videos, you might see that this move since 2015 is, according to my latest interpretation, an ending pattern. Okay, now Elioticians tend to call it an ending diagonal, but to be honest with you, it doesn't need to be a diagonal. Okay, and if you try to run like a diagonal lines and channels and whatever you do, it doesn't really do it justice. It all it does is merely uh, get you to think in the wrong direction. So essentially, what this pattern is, what AriasWave analysts call it, is it's basically a type 2 weak 5-wave move. So what that means is, yes, it does move up in 5 waves, but each wave is in 3 waves, right? So as you can see, the first wave being wave 1, and then we had this very interesting correction that occurred here. I had to basically do quite a bit of digging on this one overall to accept this view as being plausible, so as to not break any rules. And I did find that it is, well, according to my opinion, plausible, and that this move here was a wave 3 after the 2020 move down in Feb or March of 2020. And then we had that another 3-wave move up. Now, initially I thought this was something else, but as I said, I'm always revising and reviewing my counts. This is something that I teach people to do. And I think it's a very important skill because it teaches you how to think about the waves rather than just relying on other people and their interpretations. But also, there's a community where you can share ideas and get some feedback and build some kind of confluence or synergy, if you want to call it that. This particular view suggests that we are in the 5th wave of this move. Now, wave A, okay, so every zigzag has an ABC, but the B portion or any corrective portion is a very specific set of waves that occurs, right? Namely A, B, C, D, E. Now, these waves can occur in different forms, but there are only a limited amount of forms that they can take. So AriasWave is very objective in that way. And it does tell you that, yes, these waves need to happen, and they will happen, right? This has been back tested extensively. Not too sure if you've been following my work, but if you're new to it, it's always the case. Because we can't see into the future, it's best guess or best educated guess using a methodology. It's like installing a program in your mind where you read it according to this way of looking at it. So you form your opinions. I won't get into the bigger picture because that's on a previous video. If you want to go back and look at that, I might even link them below in related ideas just so you can see how we got here. But essentially, we're looking for a C wave up to complete this 5th wave of a D wave, a larger D wave that started quite a while back. Now, so looking at the last zigzag is what I want to focus on. Okay, so let's just go into this detail. So we have wave A, okay, which is this move here. And then we have the start of wave B. So within wave B, you get A, B, C, D, E. Now, we have seen A, B, C. We are currently in D. Now, this particular D wave has a name, right? It's called a type 2 expanded zigzag. So what that means is that once you see a certain set of corrective patterns unfolding, it can only mean one thing. It can even help you determine a previous wave which looked a little complex to begin with, because these waves can only happen in certain places at certain times. So I took it upon myself to create this little example of why I believe this wave D, which is something that I always say, wave Ds are typically breakout waves. So what are we breaking out of? Well, this triangle pattern, right? This triangle pattern, sorry, let's go back for a second. This triangle pattern that is basically part of this entire fifth wave zigzag, right? So created a disjointed angle and placed the two highs here and lined them up. Basically, we have a triangle wave B forming, right? Now, this is what we need to break out of. And before I go back down lower into the lower degree, I just want to point out that wave C needs to hit an all-time high. So wave C can't have started back here because it wouldn't really be able to produce that length, right, and that symmetry. So based on experience and knowledge using AriasWave, what I believe will happen is we'll get a D wave breakout followed by a retest of the triangle before we finally complete this wave C. Now, whether that happens around March, April, May, we don't know, right? We don't know how long it can go for, but this is purely based on pattern, not timing, right? You can enter a market using specific knowledge. So what I'm trying to get at here is, if this, just say for example, you're long at C and you know there's going to be an E, and you know that that C wave has to make a new high. Well, E wave probably won't go very low, right? I don't think that it would. Plus, it would be a case of resistance becoming support. So even if you did go long down here, as I've mentioned in previous videos, you could potentially hold that all the way to the top, because it needs that length to the upside in order to create that final C wave move. Okay, so I think that's fairly important. It's also fairly important to understand why this happens, right? In terms of patterns, in terms of AriasWave, learning the waves is a very valuable thing. Okay, so essentially we're looking for a move down followed by that move up after we complete the D wave. Now, of course, if you wanted to, you could take profit at the end of the D wave, wait for that pullback, and then re-enter at a break of the start of wave E. Because obviously, if there's a 5-wave move down and you break the start of it, well, that doesn't mean that it's going to keep going down. And these are the logical steps that you take in order to understand how these particular moves work. Once you understand the pattern, once you get a bit of a firm grip on what's happening using a methodology or a way of thinking, and that's what this is about. So after we saw this move up, I concluded that this is an A wave up here. This whole thing was a 5-wave move. Okay. Now, part of the reasoning behind that is because of this 3-wave move A, and then another 3-wave move B. We'll probably get a pullback there, but it won't. None of this can go below the start of wave A in brackets, right? So the green line down here around 1752. So you're pretty safe, in my opinion, until we hit the end of wave D. Even though it will be a bumpy ride, you can also trade the mini moves, but it becomes a little bit. Yeah, look, you can, you can, you can. But that's more advanced I suppose you need to understand it a bit more before you get into that. Explaining it to you here probably won't do it justice. So for the purpose of this video, my idea here is that you can hold that long position and ride it up to the high. If you're more experienced with AriasWave, you can trade the waves that come in between in a certain way. Okay, so there are certain things that will occur in this particular type 2 expanded zigzag before wave D ends. And then obviously we'll get wave E and then the run up, the final run up. So that will be interesting to see. So at this point in time, it's just a bit of an update as to what I think is going on in gold, what the pattern is saying, what it's basically, what kind of path it's going to take before it gets to where it's going, which is the all-time high. So that's about it. Hopefully you found this video interesting and informative. Thank you for watching.